Hello Maverick traders, this is Imri and welcome to today's currency recap. So overall, a relatively tame day in the markets, considering some of the larger swings that we've seen back and forth. Some big world news today. Queen Elizabeth II dies at the age of 96. I'm just going to leave it there. I don't think it's going to have any impact on the markets one way or the other, but it is nonetheless a significant historical event. The European Central Bank came in with an outsized rate hike, 75 basis points. Just as a casual aside, I've been talking about the ECB for a while, and there was no way they were going to be able to maintain their dovish stance on things. They would have to adapt and try and catch up with their peers. And I think the Bank of Japan is going to be the next central bank under the spotlight. They're going to be forced, I think, to try and prop their currency up. A weak yen is okay for Japan in normal economic times, but right now it's causing them a lot of problems, and the Japanese economy is absolutely hemorrhaging right now. It's too early to call a significant recovery in equities just yet, but we're going to take a look at that in a moment as we take a look at this chart of the S&P 500 cash basis. So you can see we're trading below both moving averages. We bounced right at this prior level of support, which is really cool to see. It's also the 61.8% Fibonacci retracement level, or very close to it anyway. So the elements are there, to kind of support a bounce, but and we have gotten a bounce, but whether or not this leads to a full-fledged recovery or not remains to be seen. I think it's pretty likely we're going to see 4150 to 4200 at least, and I'm going to refrain from calling for a bigger move to the upside beyond that at this point. So I do think we will see a sustained recovery over the next few days and into, of course, into next week in equities. But beyond that, I think it's too early to tell whether it's a bear market rally or the start of a meaningful bounce. Now, September is historically the worst month for stocks, so make of that information what you will. So that's my call for the time being. I think we'll see 4150 to 4200, and let's take it from there. Of course, these moving averages, the 50 period in orange here particularly, is going to potentially serve as resistance, so we're not too far from that. So I'll be interested to see how the market trades tomorrow as we head into the weekend for sure. Over in the total world stock index, it's a pretty similar story. I think there's a little bit more room for the market to bounce, relative to the S&P as we head into that 50 period moving average. But kind of same thing. I think VT can trade to somewhere between 90 and 92 before this move will stall out potentially. So just keep an eye on those levels. And then in the crypto basket, we're trading into some technical support here right around the 20,000 level in this basket. So keep an eye on that. I wouldn't be surprised if we bounce for the next few days, kind of similar to what I'm expecting to see in equities. Those two markets remain quite highly correlated, if you will. Okay, so just based on the fact we're trading below those moving averages, I'm going to stick with the reading of -2 on this market, despite the bounce over the last couple of days. Of course, that can change very quickly as we trade back above the 50 and then perhaps even the 20 period moving average. In terms of news, there's not too much on the calendar apart from Canadian employment report numbers. That's coming out early tomorrow morning, 8:30 a.m. Eastern Time. Moving on now to currency analysis. Okay, so in the cryptocurrency world, Bitcoin Cash had a great day today, up almost 8% as I'm recording this. And none of the cryptos as of recording, have traded lower on the day, but Bitcoin Cash definitely leading the charge here, followed by Solana. Then over on the fiat side, the Swiss franc outperformed today on a relative basis. whereas the Aussie, the Kiwi, and the pound underperformed, and the yen continues to struggle. It's been interesting seeing the dollar pull back and the relative outperformance for the Canadian dollar relative to its commodity currency peers as well. So on the velocity side of things, I'm not seeing a whole lot of energy. We'll take a look at some currency baskets in a minute, but I don't think tomorrow is going to be too much of a trading day for me personally. But let's now go through some price charts so you can see what I'm looking at. And whether you agree or disagree will be entirely up to you. So first off, we've got the Canadian dollar basket given. We have the Canadian dollar news coming out. I really like the idea that we're going to trade into this resistance, which is basically a multi-year high in the Canadian dollar basket. I mean, we haven't seen these levels since 2013. So I'd be curious to see if we can test those levels and whether we're going to stall and then pull back once we enter into that resistance zone, or if we're going to break right through it. Swiss franc, we just broke through a short-term resistance area here and trading strongly. I mean, look at that. The relative strength index, is yet to reach meaningfully overbought levels, and we do see some bearish divergence here. So that does lead me to wonder how much more this Swiss franc rally has in it before we start getting a pullback. So I'd be really cautious of buying Swiss franc strength right now. If I were to buy the Swiss franc, I'd probably do so with a smaller position size, just because of how extended it is. The move's already happened. We can look for specific chart patterns on the Swiss franc crosses, to kind of play the Swiss strength as a continuation trade if the appropriate setup presents itself. But I'm always wary of chasing strength, especially after that move's already happened. And then next up, I've got the pound. So I said keep an eye on this resistance area. Well, we broke through that resistance area, spiked right back through it, and now we're kind of trading in it again. So I'm interested to see if the pound will break down. I think it will break down, and I think we're probably going to test these lows from 2019 in the basket, which would be an excellent trade. The yen just continues to break down. I mean, we're now trading at levels we haven't seen. We broke below the 2014 lows, and we're now trading, at levels that we haven't seen since 2007. So that's pretty historic. If I take a look at the relative strength index on the monthly time frame, we're entering into some oversold territory. On the weekly time frame, we're in oversold territory, and on the daily time frame, we're in oversold territory. So, there's no reason for the yen to turn around, but technical conditions being this oversold on that many time frames, especially the higher time frames, makes me very wary of this. I do think there is still some yen weakness to go, but man, I'm definitely taking much smaller position sizes on my yen trades than I was even a few days ago. All right, so just something to keep in mind. And then finally, the Kiwi, we're just kind of hanging out in support here, hanging on by a thread. So if we break break below the support region, I think that can be an exciting opportunity to short the Kiwi. So that's what I've got, guys. That's what I've got going on. So in conclusion, I'm not seeing too many immediately actionable setups. So if you are trading tomorrow, please stick to appropriate position sizing. I'm a high volatility trader, like I thrive on volatility. And right now I'm just not seeing that kind of energy in the market. So I'm patiently waiting. I'm waiting for that energy to return. And then I'm going to press the attack once that volatility is back, right? So that's just a little bit of an insight there into my personal trading plan. Okay, thanks everyone. That's it from me. Quick one today. And I won't see you guys next week. I'll be traveling next week, but I will see you the week after. Take care. Good trading, everyone. Take care.